With a market valuation of 46,411.56 crore, Indian Hotels Company Limited is a large-cap company in the consumer discretionary goods and services (CDGS) industry. The Tata Enterprise Indian Hotels Company Limited (IHCL) operates in the hotel and hospitality industry. The shares of Indian Hotels Company are among the multi-bagger stocks that the stock market has witnessed. Let's know how this Rakesh Jundunwala portfolio stock has generated multi-bagger returns and whether should you buy the stock or not. Share price history of Indian Hotels. The shares of Indian Hotels Company ended Friday's trading session on the NSE at 326 rupees and 50 paise per piece, down 2.20% from the previous close of 333 rupees and 85 paise. Compared to the 20-day average volume of 5,830,180 shares, the stock's total volume of trades on Friday was 5,791,275 shares. From 30 rupees and 22 paise on January 1, 1999, to the stock price it is trading at now, a multi-bagger return and an all-time high of 980.41% have been recorded. The stock price climbed from 106 rupees and 12 paise on September 29, 2017, to the current market price during the past 5 years, resulting in a multi-bagger return of 207.67% and an approximate CAGR of 25.19%. In the last 1 year, the stock has gained 77.82% and on a YTD basis, the stock has gained 77.40% so far in 2022. On the NSE the stock had touched a 52-week high of 337 rupees and 20 paise on the 16th of September 2022, and a 52-week low of 158 rupees and 54 paise on the 22nd of September 2021, indicating that at the current market price the stock is trading 3.17% below the high and 105.94% above the low. For the quarter ended June 2022, the company recorded a promoter shareholding of 38.19%, FII's holding of 15.07%, down by 0.96%, KK, DI's holding of 29.56%, up by 1.05%, KK, government shareholding of 0.13% and public shareholding of 17.05%, down by 0.09%, KK. Should you buy the shares of Indian Hotels? The research analysts of the brokerage firm Sharekhan has said on Friday that the Indian hospitality industry is growing at over 20% versus pre-pandemic levels, led by room demand for domestic leisure travel, a recovery in demand from the meetings, incentives, conferences and exhibitions (MICE) segment and business travel, and high demand from weddings and events. Revival in the foreign tourist arrivals, FTAs, with easing of travel restrictions will further boost the room demand in H2 FY 2023 and will also help room rentals to remain high. Indian Hotels Company Limited, IHCL, posted strong growth of 3.7x in revenues on YOY basis and EBITDA margins improving to 30% in Q1 FY 2023. Domestic occupancy ratio stood at 68% in Q1 FY 2023. Despite Q2 being a lean quarter for business, occupancy ratio is expected to remain close to Q1 levels due to sturdy room demand in key domestic destinations. They further said in their research note that room demand is expected to exceed room supply for the next 2 to 3 years, which will help occupancies to remain high. The company has charted a strong growth plan to be achieved by FY 2025-26 with strong improvement in cash flows and strengthening the balance sheet with focus on becoming debt-free. Pent-up demand in the domestic leisure travel along with recovery in inbound tourism will help in posting strong performance in the coming quarters. EBITDA margins will consistently improve in the coming years. Thus, we maintain IHCL as one of our top picks in the hospitality space. The stock trades at 27.9x/19.9x its FY 2023/24 EF/EBITDA. We maintain a buy recommendation on the stock with a revised price target of 380 rupees, rolling it over to September 2024 earnings. We are introducing FY 2025 earning estimates through this note. The target price set by the brokerage is reflecting a potential upside of 16% for the stock from its current market price. For the quarter ended June 2022, the latest investor AKSHIT Unvola had hold 15,729,200 shares of the company or 1.11% stake, and her wife Rekha Unvola hold 14,287,765 shares or 1.01% stake in Indian hotels. The views and recommendations made above are those of individual analysts or broking companies, and not of Mint.